Welcome to this edition of Decryptage on Africa 24 English. We are pleased to have with us Gwen MWABA. She is Managing Director of Trade Finance and Correspondent Banking at Afreximbank. She explains what structured trade finance is and why it is important in the African banking and financial landscape. She also discusses the importance of Afreximbank Trade Finance Seminar on the African continent. Mrs. Gwen MWABA, thank you and welcome to Africa 24 English. During the Afreximbank Trade Finance Seminar 2024, you gave a presentation entitled Understanding Structured Trade Finance. Could you explain how structured trade finance differs from traditional trade finance? What makes it particularly effective in addressing the unique challenges faced by African companies?
Yeah, so thanks very much for that question. Actually, so structured trade finance is a type of financing. You know, you have different types of financing as a lender. Usually, lenders will lend against the balance sheet of a company. So they take a view on how much money a company has, how much assets they have. When you're doing structured trade and commodity finance, you actually look at the asset that you have financed, whether it's a commodity or some other type of asset. So that type of structure is what we call self-securing and self-liquidating. And what that means in simple terms is that, let me use a practical example of coffee. If we're financing coffee, the coffee that the lender finances becomes the security for the financier. And the repayment from the sale of the coffee is what comes back to repay the loan. Obviously, there's a lot to talk about within structured trade and commodity finance, but that's just a simple layman's illustration of what it means, self-securing and self-liquidating.
Why do African countries need structured trade finance to participate in the 2024 Afreximbank Trade Seminar?
Number one, Africa is a resource-rich continent. So in order to finance some of these high-value commodities such as crude oil, mining, precious metals and base metals, and semi-precious metals, we need some kind of structured financing to do that. So the goods are produced, so basically you advance funds to a borrower to enable them to produce the goods, process or semi-process the goods, ship, get paid, and then those monies come back. Now, it's really important in a continent like Africa and Namibia also, because not every type of business has a huge balance sheet that can take the levels of financing that are required for some of these transactions, because they can run into hundreds of millions of dollars in terms of requirements. So structured trade and commodity finance enables you to leverage more than what the balance sheet of a company is able to sustain on its own, because the debt carrying capacity of a balance sheet might be much less, but if you use a structure, you can leverage it many more times.
Given Afreximbank's role in promoting African trade, what do you see as the key opportunities for structured trade finance to drive economic growth and facilitate greater intra-African trade?
So I think, as I'd mentioned, because Africa is such a resource-rich economy and our resources range from hard commodities, soft commodities, we do agro-processing, all of these types of different resources are very well suited to structured trade finance. So hence, the opportunity for Africa is almost a natural fit with that type of financing structure, because you need a lot of money, for example, to drill oil wells in order to produce the crude, or to do a mining, an open or underground pit mining. You need a lot of money to extract the resources from the ground. Even in agri-processing, after the agricultural commodities have been produced, you need to semi-process. You're not just going to take, for example, the cashew nuts in their shells and package them and ship them. You need to sort them, grade them. So structured trade and commodity finance enables a borrower to have cash upfront to do all of those activities to get their product into a state or quality state that a buyer has asked for, and then they ship and then get repaid by the buyer.
One of the challenges in African trade finance is access to capital, especially for SMEs. How can structured trade finance be used to bridge this financing gap, and what is Afreximbank's role in this process?
Absolutely. I would say that the reason why we do this capacity building training is to transfer skills to African bankers, to upskill them. Because this type of training is available all over the world, but you usually have to travel to the US, to London, to Singapore. So not many banks can afford to send large teams of people. So when we bring the experts to the African continent, as you could see, we had over 350 people in the room. So just from 3 days training, we can train 350 people. If banks were to take a decision to send their staff for training, maybe only one individual would go per organization because it's expensive. So we do believe that by enabling and transferring these skills, more people can then stop rejecting transactions which are otherwise unbankable, because structured trade finance makes unbankable transactions bankable. So the hope is that we will then see more financing going on the African continent.
Structured trade finance is another practice that is not widespread in the African financial landscape. How urgent it is for Africa to start exploring this particular trade finance solution.
Not for structured trade and commodity finance specifically, but I can tell you what Africa's trade financing deficit figure is. The African Development Bank every year does a survey which measures the trade financing gap. And basically what that trade financing gap is the amount of trade that is available that requires financing that goes without financing, meaning that people apply for this financing and they get rejected. This figure is estimated to be 90 billion to 110 billion every single year of opportunity that could have been financed. And when you look inside the data, you find that the makeup of the corporates within that data is largely SMEs. So SMEs have a much, much higher rejection rate when it comes to accessing financing than large corporates, for example. I think the statistics show that large corporates have a rejection rate of around 20 to 30%. With SMEs, the figure is much, much higher. It's in excess of 60%. So you can see, and there are various reasons why that is. You know, SMEs are perceived to be riskier. Sometimes they don't have audited financial statements, which the traditional banker can rely on. So these alternative means of financing, like structured trade and commodity finance, actually help to take what is an unbankable deal to convert it into a bankable transaction so that more people can access financing.
As digital tools become increasingly important in trade finance, how does Afreximbank plan to integrate digital solutions with structured trade finance to improve efficiency and reduce risks of African traders?
So we actually tackle it in two ways. One way is we have a program for supply chain financing, which is also an alternative means of financing SMEs as well. That is a technology-driven type of financing. I won't explain the mechanics of it, but basically you have a big anchor buyer who has a string of SMEs who are providing services. So that is technology-driven. You can't do it off the back of an Excel sheet because it's about discounting receivables, and this is high volume, churning business, so you do need technology to drive that type of product. So Afreximbank launched its own supply chain financing program in November last year, and our model is that we enter every market and partner with local banks. Our platform is called TradeLink. That's the brand of the supply chain finance program. The second thing that we do to introduce efficiencies is within the organization itself to use more technology. For example, technology is available now for documents checking, for people who are working in operations areas, who are checking documents supporting letters of credit. That efficiency has manifested by reducing the amount of hours, for example. If a human being was checking documents for an LC, it might take them 1 or 2 hours to make sure that there are no discrepancies and ensure that there are no losses. If you use artificial intelligence, the time is cut down to less than 30 minutes. So you can see that on its own really drives efficiencies. So that's how technology is being sort of harnessed within the trade finance world.
Looking ahead, how do you see the future of structured trade finance in Africa, particularly with the growth of the African Continental Free Trade Area? What role do you see Afreximbank playing in supporting this growth through structured trade finance solutions?
Yeah, I think the opportunity is absolutely immense. Africa is a continent of 1.4 billion people now. That's a huge marketplace. So if we can boost intra-regional trade, we can use financing mechanisms such as structured trade finance to ensure that more people have financing. But more specifically, Afreximbank has an initiative of financing and developing industrial parks across the African continent. And one of the ideas is that the bank will provide all of the hard infrastructure. They identify the land, acquire the land, provide all the hard infrastructure such as power, water, so that it's easy for businesses to go and locate themselves inside of those industrial parks. Now, some of these industrial parks will be used for aggregation of commodities. So let's say you have a business that is exporting sesame seeds. Instead of, having various countries sort of storing sesame seeds and exporting small quantities, these industrial parks can, for example, aggregate Africa's sesame seeds, semi-process, package, and then export either to other African countries or outside of the continent. So in those types of requirements, structured trade finance becomes very relevant because you need the money up front to go and purchase the sesame seeds from various countries, and then you need the money to process, you need the money to, create your packaging and make sure you meet the quality standards before you ship. So again, structured trade finance is a wonderful tool. I'm just giving one example, but actually this can apply to any kind of commodity.
Mrs. Gwen MWABA, thank you for answering Africa's 24 questions. And to our viewers, thank you for watching this program. Stay tuned to Africa 24 English for the best African news in streaming and replay on our website, africa24tv.com, and on all our social networks.